Hi, everyone. Welcome to another episode of Fire Trail. In today's episode, I want to continue to have the discussion about the HSA. In my previous video on the HSA, I talked about how you can leverage your HSA account and allow it to grow into $1 million retirement account. After posting that video, I had some individuals ask me, like, well, how do I get access to that money? How do I actually spend that money? And that's a great question. I really didn't go into great detail how you get access to the money or how you go about spending it. So that's the purpose of this video today, is to discuss the two main ways of how you can spend your HSA to maximize it during retirement. Hey everyone, this is Xiao Yu. I retired recently at age 37 from my corporate finance job, and now I love spending time making YouTube videos, talking and discussing how individuals can reach financial independence and retire early. Okay, let's get started. So, as a quick recap, an HSA is for a high deductible medical insurance policy, medical insurance, right? So last video, we talked about how you can use it to, if you just invest, let's say 6,000 every year from the age of, let's say, 24 until you're 65, and that would grow to $1 million, or if it's at a weighted average 7% rate of return during that period of time. It could even become almost $2 million if it was a weighted return of 10%, right? And you can look at that video, rewatch that video, take a look at it to refresh yourself on that math. So now, let's imagine now we are 65 years old. Our HSA, we follow the math, and it becomes $1 million, $2 million. So, how do you gain access to that money? Well, there are really two ways. Number one, there are you can have a list of all your receipts that you have acquired of medical expenses acquired from when you were 24 to you're 65. And let's say, for the sake of our example, you incurred 100,000 of medical expenses during that period of time. Well, now when you're 65 and it's at $1 million, you can submit receipts, not and take withdrawals from it. Now, you don't actually submit receipts. Only if the IRS audits you, then you would provide them the receipts for the $100,000 that you requested a distribution from, right? A reimbursement from. And that would be tax free, 100%. No penalties, no taxes. Now, here's the catch. That's when you're 65. Okay. Let's say that you're 50 years old and you want to withdraw money from your HSA, but it's not for a medical purpose. Well, what would happen? Well, here's the rule. If you are not at the age of 65, okay, this is 64 and younger, and you withdraw from your HSA for a non-medical expense, there's a penalty that's assessed, a 20% penalty. And on top of that, whatever amount you withdraw, not only is it assessed a 20% penalty, but you're also taxed as it was regular income. So for example, if it was $100,000 you withdrew at 50 years old, and you say you want to use it as a down payment for your new home, well, that $100,000 will have a 20% penalty, so mathematically 20,000, and that $100,000 would be added as taxable income. Okay, so that is if you are below the age of 65. Now, let's restate that example, but just change one fact. Instead of being 50, now you're 65 years old. At age 65, you are eligible to take money out of your HSA for any reason. let me make that clear. At age 65, you can take penalty-free distributions from your HSA for any reason. That 20% penalty, gone. Okay. However, in order to be both tax-free and penalty-free, the distribution must be for a qualified medical expense. Withdrawals made for other purposes will be subject to ordinary income taxes. So that $100,000 that you withdrew to pay for your house at age 65, no 20% penalty. But that $100,000 will still be considered ordinary income for taxes purpose. So what does that really sound like? That sounds to me a whole lot like a traditional IRA. Sounds like a pre-tax 401k. So this is a great method of maximizing the HSA and allowing it to grow tax-free. And at age 65, you can literally treat it like a traditional IRA. And whatever money you withdraw, if it's for medical purposes, no tax, no penalty. If you withdraw money for any other expense that other than medical, so let's say for purchasing a home at age 65, no 20% penalty, and you're only taxed regular income as regular ordinary income. Okay, so I hope that makes sense. The two methods. Okay, just a recap: submit reimbursements for medical expenses you incurred throughout your life. You would get reimbursed for that, 100% tax free, no penalty at all. At age 65, you get the benefit of taking the money for any reason with zero penalty, no 20% penalty. Okay, I hope this video makes sense and that you gain additional knowledge on how you can maximize your HSA. Please leave a comment, like the channel, subscribe so you can keep up to date with the videos I make. This is Xiao Yu, and I wish you the best on your journey to financial freedom. Take care.